FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You're listening to the Financial Survival Network. It's Kerry, Lutz. What is going on in Canada, our neighbor to the north? Things have been good there for so long. I guess it's a new era. Things just keep going higher and higher. And the average home price, $450,000, up 8%. And I guess real estate always goes up. Danielle Park with us to throw water on that theory. Danielle, how are you?
Hey, I'm great, Kerry. Thanks. Well, you know, what you said is not actually true, because the only thing in Canada that has gone up in the last 6 years has been debt and housing prices. Our stock market actually is lower than it was at the peak in 2008. So we've had 7 years of sideways stock markets. And then, of course, the commodity stuff is a lot lower than it was in 2008. But the banks, buoyed by the credit cycle, which is, you know, shocking and off the charts in terms of global perspective. Everyone's commenting on Canada and our madness with household debt these days. So the banks, the housing market, our household debt, that's all related. And that stuff has continued to go up, even as our economy has weakened, right? Even as everything's turned down, the leverage is increased. And you know how that story ends, Kerry.
Well, I think I've seen a couple chapters of it play out, but the only one crazier than Canadian homeowners, I guess, are Chinese housewives opening up margin accounts. I read there that in China, their stock market capitalization just crossed 10 trillion, 2.2 trillion worth of margin debt. So I guess debt is the ultimate intoxicant, probably up there with crack cocaine and heroin.
Yeah, basically that's right. And, you know, the only argument that anyone ever has in the late phases of these manias is to say you point out the ludicrous nature of the valuations, the insane behaviors that are going on, the rapidity of the increases that are taking place in leverage, and all anyone ever can counter with is, well, prices are still going up. So if prices are still going up, their theory is it's all well. But, you know, it's all well that ends well, Kerry, and we know how this stuff ends. It's a disaster, right? So you've got things like Canadian economic data continuing to shock people. You know, we have, as I was mentioning to you before the call, the data this morning shows we have the highest inventories ever on record in businesses today. And meanwhile, the inventory to sales ratio is, you know, just hideous. I mean, we've got dropping sales. All the people that hoped that a falling loonie was going to be the savior, you know, if you think back a few months ago, the meme was, don't worry that oil prices are crashing because the loonie's crashing with it. And with lower dollar, we're going to see a renaissance in manufacturing in Canada. And that's going to be enough to offset the weakness on the resource side. Well, in fact, that's not the case. We had a contraction in growth in the first quarter of GDP, and it's looking like, you know, we're probably setting up for that kind of a read, maybe flat in the second quarter, and things are just getting worse from there, Kerry. So, you know, we've got a very rapid decline over the last year, as I say, except that real estate, debt, and banks have gone higher, all for the same reason.
Yeah, people just never learn. Somehow it's going to be different this time, right? We're in a new era. At least you don't hear people talking about, hey, this is a new era and things are different, things are better, right?
Yeah, well, you do hear people say that. You hear the status quo say that. The typical banker, investment broker types are all over the airways saying that. You hear the economists, many of them who work for the big banks, all saying that. You know, they're looking at these train wrecks happening and saying, but we think that this time, you know, it won't be the same as in the past. You know, the fact that manufacturing sales are down over 7% from this time last year, you know, that only happened, Kerry, a decline of that that nature heading into the last recession. We saw that kind of decline starting in the early months of 2008, and it went much deeper from here. So, even though all that stuff is going the wrong way, and as I say, the inventories are off the charts, and that means new sales, new orders, they're all in decline. Canada apparently still thinks that it's going to get away with something here.
Yeah, well, nobody gets out alive in the final analysis, right?
Yeah, it's interesting, that article that I put on the blog this week, Memo to Finance or to the Fed, First Do No Harm, because I've often talked about that as, it's like part of the, physicians and surgeons oath is first do no harm. Make sure that any intervention you're going to take is not going to have more cost to the patient than benefit, right? That's part of the fiduciary standard or thought process that they're supposed to go through before they start treating someone for an ailment. And when you look at finance today, I've long felt that my duty was along those lines. If you're going to suggest something to someone in terms of financial planning, in terms of intervention or a policy, make sure that what you're doing isn't going to cause more harm later than the symptoms that you're facing, and wanting to have the response or the challenge that's presented. And that's what they've done for years now. Every time, we came to the end of a secular boom in commodities in 2008 with the bursting of the global credit bubble. Then we had a revival on QE into 2011. And instead of acknowledging that secular cycles in commodities and resources tend to be a decade long, and we'd had a very good run, and therefore we were due for a downturn and due for a pullback, what happened was people wanted to believe they could keep adding on leverage and keeping that game going. And so now they're, beyond all help, really. And the only recourse is going to be bankruptcies, write-offs, write-downs. People are not going to be able to pay back the principal that they've borrowed, Kerry, even at these low rates of interest. God forbid rates should trend higher, which, P.S., they always do eventually. I don't think they will shortly because I think the world's in this big downturn again. But when rates trend up, people have no hope paying back the amounts of money borrowed here, even if they're able to keep their current jobs, right? And that is a very big if, because as you well know, you tend to get a big spike in unemployment in these periods. Companies are laying off every day in every sector. It's not just weakness in the manufacturing sector or the resource sector, but the retail sector, which is so tightly tied to all this credit use in the past few years. Every week in Canada, we get a new story about a new franchise pulling out, closing down, shutting off a bunch of stores, layoffs. It's just, it's all connected, and yet people want to continue to whistle past that graveyard, and it's hard to watch. But they've been led to do that by these policy moves over the past few years. The policymakers come in with the PhDs. They say, we're the experts, like a Monty Python skit. And they say, listen, you don't know what you're doing. Sit down. We've got it from here. And they lead them right into the abyss, right, of debt. And then once that happens, everyone says, gee, we didn't mean for that to happen. We didn't know you guys were going to self-destruct. We thought you would be responsible with borrowing, which is still the bank's line, right? The Bankers Association of Canada looks at this horrendous data of late and says, well, but we still think that Canadians are responsible with their spending and borrowing, even though that flies in the face of every shred of evidence that we have.
Yeah. And I mean, get real here. I mean, you just see it happening over and over again. Danielle, it doesn't matter what country it's in, whether it's Hungary or the US or Canada or China. If credit is made too easily available, people are going to abuse it. It doesn't matter who you are. If it's there, people take advantage of it. And consumer credit is just about the worst thing that was ever invented in the world. And then consumer credit is always made available at the expense of business credit, which is something that the economy really needs to thrive. While consumers can get credit to buy houses that are too big for their needs, that they don't really need, and flat screen TVs and cars that they really don't need. Their old cars just fine. Businesses are struggling. They can't get needed capital to start up, to expand, and to take their businesses to the next level. And you have this whole misallocation of capital at every level of society. And you have Uncle Sam in the United States. I don't know what your equivalent slang term is for your guy running things there, but he's like actively out there making sure that you can get money to finance a home, but you can't get money to start up a business. It's just this insanity.
It's worse than that, Kerry, because I've been doing a lot of writing on this topic lately. And really, if you look back, what I think, leverage tends to begin on a premise that is real or founded, and then go to complete mania and insanity from there. So, for example, the baby boomers, as you know, were all turning into their early 40s, coming into sort of 1990 in that era. And they had basically been through their first big consumption wave, which drove interest rates higher and inflation higher. You had, the 60s and the 70s when the kids were all sort of going through their initial stages. It drove demand through the whole economy. And then you had the Vietnamese, the war in Vietnam, the U.S. involvement, all that drove inflation, right? And demand in the economy from government and from consumers. So what happened was Alan Greenspan comes in as the head of the Fed just at the time that the boomers are entering their slowdown phase in terms of consumption, basically moving into their 40s, which is about when people's consumption peaks and then they start to be net savers, right? And so no one wanted that to happen. And so instead of accepting that the above 5% growth rate that the U.S. economy had experienced during the 60s and 70s was not sustainable, could not continue in a developed and mature economy. But instead of believing that, you had monetary magicians thinking that, all we have to do is cut rates. So every time there was a slowdown, they would cut rates. And of course, if you watch that step down throughout Greenspan's career from 87 to 2006, he basically took it right into the arms of the housing bubble in the U.S. and then handed it over to Bernanke, of course. And then they basically continued to do that through whatever intervention they could think up till they got the world so full of debt and leverage. Again, as the great white hope or policy leader of the planet, because they had influence to central banks all over the world. And now instead of admitting, wow, that was a really crazy episode, we made a lot of mistakes, we need to go back and find out where we went wrong, they keep insisting that we can somehow keep this game going. And I think what you're seeing in Greece today is the reality that, no, actually it's impossible to keep it going, because you can't cut things to the bone and then expect people to just exist like air plants. They have to actually, have some place to live, jobs, food, savings to get them through their old age. And, the more that you deny that, the longer this goes on. But we're getting to an end game. And I think there's if people were to ask me today, where do you think the growth is? The growth is not going to be in things like retail sales, in my view. It's going to be in things like smarter energies and technologies. So things that can make huge efficiency leaps. So people will need to waste less and save more in this environment. So spend less, less burning money in your tailpipe, for example, and more finding things to recycle and reuse, more walking, more biking, more growing your own food, more vertical farming, more, tattoo parlor removal. There's another big growth area, I swear. There's only about 2 places in our whole area that take off tattoos right now. I'm telling you, Kerry, that's going to be a growth area if you look around the population. But also health-based initiatives. The world is at the beginning of a whole new secular boom in health-based initiatives. And I think that's where the smart technology, smart money, and energy is going. And that the whole era that we're used to, the retail consumption of senseless goods for the point of collecting junk, is behind us now. So although it's going to be a painful downsizing of the people that are hanging on and the businesses that want to continue to just keep that old model, the ones that have seen the light and have turned the corner and seeing where growth for the world is going next, I think there's a lot of opportunity there.
Absolutely. And when you talk about tattoo removal, a woman I knew who was a dermatologist got a patent on a laser that was one of the original tattoo removal lasers. So you're definitely right, because one day a lot of people wake up and you say, wow, how did I get this thing? What was I
How
thinking?
much did I spend for this? How many thousands did I put on my credit card to have both my arms covered in ink again? Anyways, I just see nothing but upside. Like, basically, we have done so many dumb things the past 20 years.
Yes.
And I always knew that until we ran to the end of the line of credit, it was going to be hard to force change, because people get into that sort of state of mind where they just get because they can, and they don't think about should they get, or are they better off for getting, or does it make any sense to get? They just get because they can get. Mm-hmm. And that was a very kind of self-destructive chapter. But because we're coming to the end of those lines of credit, and that means on every level, right? Corporations can't really borrow more because they've already borrowed so much. Governments are already up to their hucksters, monetary balance sheets everywhere, all that. So because you're finally there, and places like Greece are finally saying, we give, and you start to get that ball reversing and rolling back the other way. And then I see lots of opportunity for much improvement.
Yeah. So what about Greece? What's going to happen there, Danielle? At least in the short term, what are you seeing occur there?
Well, they can't pay. Hey, Kerry.
Yeah, they're
they can't pay. So let's not kid ourselves. They can't pay. So you can pretend they can pay for a little while longer by jigging some, again, robbing Peter to pay Paul and taking money off this line of credit and paying that line of credit. But the fact is they can't pay. And there is no amount of moving stuff around that's going to make that fact go away. So I think that now who knows, it's been going on for, several years here past what it logically should have been able to do. But again, we've been through this manic, crazy period where all things, leverage have been considered good. So I think that we're coming to the end of it. I wouldn't be surprised if we saw some, some shocking development where they finally admit that they're defaulting in the next not too much longer. It could happen this week. It could happen, it could happen within the next couple of days. I don't know. But the point is, all I know is this: that which cannot continue, cannot continue. And that which can't be paid, can't be paid. And I know that from decades of work, finance, restructuring, whether it's legal, whether it's financial planning for individuals and companies, it's got to make sense in the end or it won't happen. And I'm afraid it just can't happen, which is, again, good. It's good to admit that. It's like watching a person racing towards a brick wall and knowing that they're going to hit it, just not knowing when. And it can be very unsettling to watch, that the amount of conviction in that self-destruction. But you've got so many vested parties wanting to keep that gig going that it's just been, hard to get to the truth. But I guess I'm telling you that I feel optimistic that truth is coming out, and that always is a good thing in the end.
Yeah, well, the sooner the truth comes out, the better. Anyway, find Danielle's work at jugglingdynamite.com. Link, as always, can be found. Show notes to this interview on financialsurvivalnetwork.com. Sign up for both of our free newsletters. Danielle, we will see you in a couple of weeks.
All right, Kerry. Bye.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.